All right. Good evening, everyone. How you doing? Good to have you here once again, and good to be on this channel with you again. All right. We'll be doing a weekly commentary on XAUUSD gold. Um, I'll be telling you what I think about the market, the direction I'm expecting price to go in this coming week. I'll focus on just gold today. Then, in consecutive times, we'll resume every other pair as we used to do. Alright, so I will just go to a fresh chart. But before then, I want us to even check the the news for the week. Let's check the fundamental news for the week. The truth is, Forex Factory or whatever news platform you use is not the only. It's not. They are not the only things that determine fundamentals. So this is just an aspect, like a little fraction of um, fundamental trading. So this is just to give you trajectory and a pointer to possible events that will happen in the week. So you can see on Monday, and of course we focus more on USD because the majority of people trade USD paired USD paired currencies, and we have yeah, a lot of people also trade JPY, Euro, and the like. So those are the concentration for most people. So we can see on Monday it's pretty dull. There's really no high impact news as such. So, but we have for Euro maybe something slightly volatile, maybe just a little. Then for Tuesday, yeah, I think we have some news on Tuesday. We have core PPI, we have core retail sales and the likes. Then for Wednesday, we have CPI for Australian dollar. Then we have some news for New Zealand dollar. Then for US, I think we have some volatility kicking in on Tuesday, Wednesday. For Thursday, everywhere is pretty dull. In fact, US will be on holiday, their bank holiday. Friday, it's pretty dull also. So I think the majority of what will happen would be Tuesdays on Tuesday and Wednesday, uh, and that can contribute to the volatility for the week. We might have just some volatility, maybe some good volatility for the week, but not very volatile. So just be there. Let me just use that word. Let me classify it as to just be there. Okay, so let's go to the business of the day. Like I always tell people, fundamentals only come to sponsor the correct move of price. It only comes to sponsor the correct move of price. So if you analyze correctly and you know what you want to do, you know the direction of price, you know where market is coming from, where market is going to technically, what fundamental will just come and do is to help you push it, sponsor it. So yeah, I did these three trades are actually trades that we're taking. This first one, you can see with the 30 pips stop loss, we targeted about 2,100 pips. It was a long ride, and that was about 70 RR. Then for this, we are using 50 pips. Though this trade, I wouldn't advise you to take it because I don't want to disclose whether I'm in or I'm out, or whether I'm still in or out. But this is not this is not to tell you to just come and enter this at market open. Whatever we analyze today, of course, that should be what you should be looking at, but don't look at it blindly. Also blend and compare it with your own analysis or your mentor's analysis. Yeah, if it correlates, fine. If it doesn't, just stick with what you believe. So this is a 78 RR trade. 50 pips to take about 3,500. Then here also we have 50 pips, a re-entry to take about 3,700. This is 74 RR. So in total, that's about 78 plus 74, that's about 152 RR thereabout. But that's not the focus now. You're not placed under any compulsory rule to trade like this. In fact, it's very risky, but this is what I find peace with, and I've gotten some level of mastery in it. So Just trade what works for you and what you find peace with. If you watch my last video, I'm going to attach it somewhere on this page. If you watch the last video, you would see I mentioned that you don't have to complicate your trading. You just have to trade something that gives you peace, something that you understand very well, something you've been able to navigate around and you've built mastery around. But the first thing is it has to resonate with you and you have to find peace with it. You don't want to stay on the chart analyzing for 2 hours or trying to get what to do for 1 hour. Even 15 minutes is too long a time to determine what to do. So you want to do something that will give you peace and something you can easily know what you want to do, whether you're going to take a loss or you take a win, or just know what you're doing in a short time. So let's go to the monthly chart. Monthly is not compulsory though, but let's just go. So what can we see on the monthly? I won't pay attention to candles like most people do. I just want to pay attention to the trend. I just want to pay attention to the trend. I just want to see the trend. That's all I want to see on the monthly. So coming to we can see monthly is very bullish because it's tilting to the upside. Even if we decide not to focus on these previous moves and just focus on what is happening here, if we decide to just focus on what is happening here, we can see the momentum is all to the bullish side. We can see strong bullish candles. The only place we are seeing some sort of rejection is at last month. We saw a rejection around whatever is there. I don't know what is there. We saw a rejection there, and this month is not done. So you don't want to conclude on this month's candle because of what you're seeing here. It's still a building candle. The only thing you can use to, if you are using candle to determine what to do, the only way you can probably forecast or predict what will happen this month or how this month will close is when you look at the previous candle on the monthly. And of course, in order to predict using candlesticks, monthly can be a very, very wrong place to take that measure. So let's go to the weekly. On the weekly, what can we still see? It's even clearer here now. What do we see? You can see bullishness. Candles following themselves. Bullish candle without giving any space for sales to come in. That's all we are saying. That's all we are saying. So let's go to the daily. And this is where you can now begin to start some reasonable analysis. So on the daily, what can I see? I can still see bullish moves. I can still see bullish moves. And of course, if you were to judge, you would say that this was the last higher low, right? Of course, you would say this was the last higher low and this was the last higher high. And price came, took out this higher low. Took out this higher low, came to tap into a low below here. Why did this happen? If we are still going to maintain bullishness, why did this happen? Then it has to be that price simply, of course, basic traders will want to use this demand to continue the buy. But one reason why price took out that low is because if you look at this low here or this demand below here, it was not mitigated. There was never a time price mitigated it. Neither did this demand mitigate this one or tap into this one. So there is still space or some gap between them. So price would, of course, because most basic traders are focusing on this demand at the top to continue the buy, price will simply take it out. It's an obvious point. Price will take it out, tap into this one that is below and continue the buy. And that is what we saw. Price continued. It tapped into that one, sniped it, and we are seeing a push. We are seeing a push. So that tells me that we are still very bullish. The break of this first low does not indicate bearishness. In as much as there's still a low or a demand below that has some good momentum gap between it, then it does not indicate bearishness yet. Rather, it indicates that what we might still have some buys. We might still have some buys. You know, those that trade SMC would say this is an imbalance, and a lot of them use imbalance to frame their buyers. And in as much as it's an imbalance that is pushing this price, the question should be, do we have an alternative imbalance at the top here to push price down if price will sell? Whatever you're seeing here inside this place is not an imbalance, but that is not what we are dealing with here. I don't trade SMC, but I have deep knowledge of candlesticks and the market to know well that this is not an imbalance. This is not an imbalance. If you think it is an imbalance, it's fine. If you have your rules that guide that, it's fine. But for me, this is not an imbalance. So I expect that since price has been able to take this momentum gap below here and it didn't bridge it tapped into it beautifully, I expect that we should continue our bullish trend and price should come and create a new all-time high. So let's go down. We've established this tapping into this demand. So let's go down to H4. Okay, so on H4, I don't need to refine anything for you here, so it's fine. You guys work on that yourself. So on H4, what do we have? We have this high that created this low, this high that created this low. That is lower high, lower low thereabout. And price came all the way, broke this lower high, which is giving us a switch of direction. Price broke that lower high and we saw a retracement into this area. So since price has retraced into this area, then we should be expecting price, nothing should really stop it from going up. So I'm expecting gold to continue a bullish price, to break the all-time high. So now, if that is what my expectation is, where would I buy from? So let's go to 1 hour, which is where I would stop. So let's not forget, okay, let me go back to 4 hours to show you something. Let's not forget that if we are to use basic demand, we can see this has been tapped. This demand has been tapped. I don't need to refine for you, of course, you know how to do your thing by yourself. So this has been tapped. This demand here also was sniped by this market here. It was sniped in this place. Whatever you're looking at down here, I don't think there's, for me, in my opinion, there's no demand below there again. So this was sniped. So let's go down to 1 hour where I'll stop every analysis. So now coming to 1 hour, what can I see? We want to look at the move that came to tap into that demand. We have this low, this high, this low, this high, then we have this low, and price came all the way, broke this, a repetition of what happened on 4 hour. Price went all the way, broke this, came back to a certain demand in this place, and we expect price to continue to blaze up. That's my expectation. I'm not looking out for anything different. So what do we see? What do we have here? You can see this demand, price came, tapped into it, and what can we see? We are seeing price giving us moves to the upside. So what is my expectation for gold in the coming week or weeks is that I expect price to probably still come down a bit. It might gap down a bit on Monday or Sunday night and then continue to blaze up, and we might even not get a gap down. We might just get price to continue to go up from here. So if we are to use this popular method that people are trading with now, you can see there's already what let me just apply this. I don't trade it, but I just want to show you guys. So we can see that there's already a sweep of this low. So ideally what they would say is that we expect price to do what? To print a buy, right? But that's not what we are focused on here. You can see the pure breakdown, and I would want you to follow through with whatever concept you trade with and whatever approach you trade with. So that is my perspective for gold. Let's just recap on it. Monthly is bullish, weekly is bullish, daily is bullish. It has not given us any indication for a sell. Daily is bullish. 4 hours still very bullish. Then 1 hour is still also very bullish. So that will be all for my analysis on gold. If you have any question to ask me, please feel free to make your comments. Drop it in the comment box. If you have any contribution, please drop it in the comment box. Then, if you don't mind, I'll be grateful if you can click on the subscribe button, subscribe to this channel, help us to build and grow this community. Then also you can find me on Instagram, the same name, Weighted Academy. Follow us on Instagram. Turn on your notification button on this channel, and you would always be informed when we are dropping new videos. And don't forget, I dropped a wonderful video that will teach you a lot on support and resistance in the last video. Please go back after now to go and watch that. Watch it till the end. You will learn something. In fact, I called the trade live. Let me quickly check on that. Then I called the trade live. I called the trade live. I will check on that for you now. Just a minute. Just a minute. Call the trade live. I'm sorry about my network. I called it trade on card CHF, if I'm not mistaken. Yeah, card CHF should still be here. Yeah, but I must have cleared the chart though. Yeah, I called the trade for, I think that was on 2 hour time frame, 2 hours time frame. So that was on 2 hours time frame. I'm so sorry, please. So I think, yeah, I called the trade somewhere around, yeah, it was exactly around this area, and I told them in that video, when you watch it, you would see it. I called it that price would possibly buy from here. Just an example. It was not even a forecast, and you can see price gave some good buys. This would have fetched some good pips for those that probably trade card CHF. This would have fetched some good pips. That was about 38 pips, being a non-volatile pair. So that will be all for my analysis and projection for gold. Don't forget to subscribe, like, comment, share with your friends, family, and turn on the notification button. Thank you, and see you in the next one.